I'm Drew Russell, your Sarasota and Manatee County residential real estate expert, and I'm here with the mid-year edition of the Russell Recap, breaking down what's going on in our local real estate market. So what has been going on? We're well past the halfway point of 2023. And what we're gonna do today in this video is take a really deep dive into the numbers and statistics and the mechanics of what I see going on in our market. If you look back at 2020, which was crazy for obvious reasons, 2021 was a market that was recovering and gaining steam. And then by early 2022, our local market went absolutely crazy, like most did in the US. Coming into 2023, most people had kind of this thought that it's really not going to continue. There's no way this can continue. And in many ways, they were right. But the general sentiment was, hey, it's been too good for too long, something's got to change. So if you look at this data slide that I have, you can see that at the beginning of this year, according to Fannie Mae, almost 40% of Americans thought that their home price would go down over the next 12 months. And if you juxtapose that with the mid-year in June, that number's down to about 25%. So people really generally seem to be more optimistic about the market at the mid-year standpoint in terms of price depreciation. So when we take a look back at what everyone thought was going to happen, let's look at the deep dive at our mid-year data. And I'm using mid-year, I'm going to include July in that as well. So a little past mid-year to see exactly what's going on statistically. If you like charts and numbers, you're going to like the next few minutes. If you don't, you might want to fast forward to the end of this video for the conclusion. So let's look at Sarasota County in general. And what I did is I bracketed these homes to kind of get the data to be more true between 400,000 and 2 million price points. So it's throughout the higher end and throughout the lower end, right? And what we see here, specifically since my last update, which was done in March, you see the market is really just kind of moving sideways. We're not really gaining any inventory in a meaningful way in the market, but sales are slowing. So things are moving a little less quickly, which is somewhat expected this time of year. And if you look at the next slide, you'll see that our days on market correspondingly is easing up, and that's kind of mirroring the slight slow in sales. You can see that right now across the county in these price points, you're kind of looking at an average of 55 days on market. If you compare that to a year ago in July, the average was 20 days. So we went from less than a month to almost 2 months as an average home sale in Sarasota County. And that's a fairly big difference in a year. So there's certainly been a lot that has changed. And if we look at it a different way, we can bracket this as far as months of inventory. And months of inventory is a vehicle that we use to measure, hey, what type of market is it? Is it a seller's market? Is it a buyer's market? How much choice is there in the market? And based on closed sales right now, with July being the last month we have complete data for at this time, we have a little over 3 months of supply. If you compare that to last July, we had a little over 2 months of supply. So we are definitely in an accumulation phase, and sales are slowing year over year at this time. What we've also seen though, and this kind of goes into the next slide, a deceleration doesn't necessarily mean depreciation. So again, if we're decelerating, we're slowing down, that doesn't mean automatically that home prices are going down. We're kind of seeing that statistically in this next slide. You can see that our median sales price is kind of hovering in the mid 400s, and it really hasn't changed too much. And in fact, if you look at August, which we don't have complete data for, but so far in August, that number is actually up a little bit. The days to sell in this graph also shows that it is taking about 55 days to sell a house in Sarasota County. So another trend that we can see is that in terms of listings coming to market in Sarasota County, the number of properties being put on the market now is way less than it was at a year ago for this time, and then way less in our typical busy season. So that's kind of a normal trend in some ways. And what you're also seeing is that the inventory of existing homes for sale is kind of staying the same. So if we're not adding new supply and the number of homes staying for sale is the same, it shows you that things are still decelerating. So again, we're in a moderating pattern. One of the really bright spots in the Sarasota and Manatee County market, though, has been our luxury end. And for as long as I've been practicing real estate, which is almost 20 years now, is we've always looked to the luxury sales as kind of the headliner for the market. You know, where are the big money investors, the players? Where are they spending their money? What are they spending their money on? And just since our last report and in the last 6 months in Sarasota and Manatee counties, we've seen several record-breaking sales. Of note was a penthouse unit in the Epic downtown that sold for over $11 million, a single-family home on Siesta Key and Flamingo that sold for over $12 million, and there are properties pending on Lido Key and Casey Key, one pending with a list price of $15 million and the one on Lido with a list price of $14 million. Also several sales over $7 and $8 million, and I did the query at $5 million, and there were too many sales to even digest. So you still see a really big money influx coming into our market, especially on the barrier islands, and a lot of people that are really smart, educated investors are putting money into waterfront real estate. So I think that's a good indication of things that are going to happen in our market going forward. So with all that data on what has happened and where we've been, you know, what do I expect for the back half of 2023 and then, you know, kind of the winter, spring going into 2024? It is a hard one to call, but what I'll tell you is I did my most recent video besides this one on backup offers, which just really indicates to me that there's a shortage of good inventory in the market. So I still think that for certain products that are priced reasonably, good quality, you know, meet all the criteria that buyers are looking for, you're still gonna find a pretty competitive market. Properties that are lingering on the market, you know, you have to read between the lines because there's still relatively low supply. So if you're not selling, you have to look at your market strategy, your pricing, etc. And I think what we're gonna really move into is just kind of more of a stabilizing and calming trend. If you look at this slide, this is really interesting. This looks and analyzes inflation going back to January of 1960. And you can see little ups and downs. I think it's fairly obvious, but the 70s and early 80s, you saw massive inflation increases. And each time you saw that, you saw a fairly quick return to normalcy. And then from the early 80s up to the Great Recession, we had a pretty stable and kind of just predictable pattern of inflation. And then of course, what happened with COVID was a massive period of inflation. And you can see that already we went from almost 9% CPI down to 3% last year. So it's really kind of calming down. And if you look at history as your guide, it seems like that might be a calming trend that will continue. Another thing, I mean, I feel like it's a drum that we just keep beating and continue to talk about, but mortgage rates, they really are affecting buyers in our market. You know, people that are either, you know, choosing to finance for tax purposes or really do need to get financing. That 7.5% rate right now is really putting a bit of a lid on their plans. And this slide here shows, you know, Fannie Mae and Mortgage Bankers Association, NAR, what the projected 30-year mortgage interest rates will be for Q4 of this year all the way to Q3 of 2024. And the general summary here you can see is that almost everybody thinks that rates will continue to ease and go down into a more normalizing trend. The average of all three has rates a year from now at 5.75%. So if we see almost a 2% drop in 30-year mortgage rates, that is really just going to continue to kind of reignite things, I think, going forward through next season and then the next fall. So in summary, my prediction would be that we're going to continue to see a normalizing market, but it's going to continue to be a strong market. We're going into an election year in 2024. So how external forces that we don't even see right now might impact the real estate market are definitely up for discussion and could be in play. But for now, I kind of see just a great environment for doing business. and things kind of trending into a more calming pattern. So I hope this has been helpful to you. If you want to talk more about residential real estate on the Gulf Coast of Florida, I'd be happy to do that with you. And thanks so much for watching.